Good morning, everyone, and welcome to this morning's session. We've started more or less on time, which is quite good for us, actually. So I'm just pointing over to David. He's telling me that the recording is underway, and as usual, you can see on your screen the disclaimer. Please, I'm sure you are aware of this, and I'm sure you've seen this many times before, but it's important that we stress this. This is a very risky business. Please don't ever use money that you cannot afford to lose, and in some circumstances you can lose more money than you originally started with. That's brilliant. Excuse me, if you've been coming along, this is the third of a series of webinars that David and I have put together, where basically we are going to be looking at the price cycle. We're looking at chart structure. We're going to be tying that to volume price analysis and multiple time frames, and really trying to convey to you how, once you understand what the price action is doing in the time frame that you're looking to trade, it will tell you not only whether there is a trade likely that you can take, but more importantly, where you think that price is going to go. Now, I'm not going to go over what I've said over the last two sessions. What I can suggest is, let me just bring it up here, is that essentially the recordings of the previous two sessions are actually on my channel, and they're also on our quantum trading channel. And you can see here, we've actually done 4 because we have this session, and then we repeat what we have done, not repeat the same things, but we have another session in the New York session later on this afternoon. So if this is your first time with us, all may I suggest is that you go over to my YouTube channel and it's only the first, David, isn't it about the first 10-15 minutes or so? And what it does is just explains it in more detail, and it saves us having to do it again every time, as it were, because in what we're trying to do is sort of build on it, as it were, without having to go back to the beginning all the time. And we do appreciate people join our webinar list at different times. People go on holiday, etc., etc. So essentially, this is a slide that you can see on your screen. This is from our Forex trading program, and it's a schematic of a typical price cycle, and it also explains Wyckoff's second law, which we're not going to cover in this session. But essentially, what you can see here, this is if you were to translate this to a chart, and we do, you can see that price cycles. If we move over to the left of the chart, you can see the price is obviously broken away from an accumulation phase, which you've actually got over here. And I suppose in a sense, maybe we should have had an accumulation over this side, perhaps to balance it out. But essentially, at some point, the price in this instrument has decided that it is now going to trend. So we have a trend, we can see moving trend higher, but we've got a certain amount of pullbacks, and then we come to what we call a distribution phase. How is a distribution phase characterized? And it's characterized by a lot of volatility, because it is a major reversal. These are not major reversals at these 2 points in the trend higher. And then once the distribution phase is over, what we call a selling climax in volume price analysis, then it starts to trend lower again, and the process is repeated. You have an accumulation phase, a buying climax, and so on and so forth. And this is a typical price cycle. And if you look at if this is the first time you're here, if you go and watch the videos that we have over on the YouTube channel, you will see that translates almost exactly. We had some examples of some currency pairs, and I think other instruments as well, where that was replicated. And this happens in all time frames, not just on the monthly, the weekly, because price action is self-similar. Now, what David and I have done is we have taken this a step further, and that is we have named, if you like, different parts of this price cycle to try and explain in what is the market state during a distribution and selling climax. What you have is you have congestion, but you have congestion with a lot of volatility. And unless you understand not only where you are in the price cycle, but what type of price action you are actually trying to trade. Are you trying to trade a nice, smooth, non-volatile trend, or are you trying to trade in a congestion phase with a lot of volatility? Unless you know what it is that you're trying, what you're trying to do, and we call that the C state, you're going to face problems. And the main problem you're going to face is, first of all, if you're trying to take a trade when a market is in a distribution or accumulation phase and is characterized by a lot of volatility, you're going to get a lot of whipsaw price action, and you're going to get endlessly stopped out because you haven't allowed enough if you like, breathing space for your stop. Now, that's the theory. That's the premise of the price cycle C states, and we'll be able to show you how volume price analysis can help you not only determine where you are in the price cycle, but it will also help you determine what is likely to happen next and what you can do about it. Now, enough about looking at the theory. The best way to see this is actually in action. And before I bring up my charts, hopefully, David, can you see my charts? Yeah, because there's a couple of, I've certainly got 3 charts that I'd like you to have a look at. One is cable, which if you've been trading cable to the short side, you should have had a fantastic ride lower. The other chart I want to have a look at is the pound yen, because it just gives us, just to give you a sense of what we mean by this, by C states and the price cycle. And I think David's going to have a look at gold, and I'm going to have a look at gold as well, because I write about gold a lot. It's something that I'm very familiar with, and I just want to explain about that as well. And the element we're going to introduce in this session is we're going to see how support and resistance comes in to help us, if you like, give structure to the price cycle, and most importantly, the levels that we have to be aware of in whatever C state we happen to be, and whatever section of the price action of this price cycle what we're looking to trade is in. But before I carry on, let me just pass over to David. I think I've spoken long enough, so here he is.
That's perfectly all right. Good afternoon, good morning, good evening. Welcome one and all to wherever you are in the world. And it's good to have you, Zena, around in Australia as well, over the other side of the world from us. So a very warm welcome to you all, wherever you are. Just very, very quickly, if this is your first time here, what we do is we focus pretty much on the MT5 platform, which you see in front of you there. If you're familiar with MT4, then MT5 is a very simple transition. It's very much got the same look and feel as MT4, but the beauty of MT5 is that it has a much broader array of time frames, as you can see on the left hand side there. So you're not restricted to the normal time frames that you find on MT4, and more importantly still is that it does open up all these other markets. So on an MT5 platform you will be able to trade Forex, of course, but you will also have access to indices, commodities, and also stocks. Not a huge around the stocks, but certainly in terms of indices, in terms of commodities, if you're interested in trading gold, silver, even soft commodities now, you'll find them all on the MT5 platform. A year or 18 months ago, it was quite hard to find an MT5 broker. Now you should be able to find them increasingly. The brokers are taking on and embracing MT5. There's a lot of rumor and speculation about that, whether MT4 is going to be replaced or not. Whether it will or not, I've no idea. But we've developed all the indicators for MT5, so you can flip-flop between MT4. If you started with MT4, it's a very simple, easy transition over to MT5. You do it all yourself through the quantum trading dashboard. I've got NinjaTrader running. I'm just going to pass back to Anna. Are you okay there? If you do have any questions, please just drop them in the chat box. Happy to answer them there, or if they're longer ones, we'll answer them on air for you.
Right, as David was speaking, what I should have done is this is actually just a demo account that I've got with this broker here in London, but it's just to give you a sense of what is now available on MT5, and you can even download it from the MetaQuote site, and I know they do offer a very wide range of markets and instruments. Right, before I don't really want to start with the pound yen. I really want to go to cable. Let's have a look. This is cable. And if you've not seen my configuration of charts before, essentially what I have is this is as I said, from MT5. I've got a whole list of different time frames I have here. I have a Renko chart, which is a non-time based chart, and it's a great chart to actually see price action in more detail, because you don't have time, you don't have that's what I mean by price action. And you can see here, this is cable, because I wanted to show cable, and you can see how this is the this is the move lower, this is in the downtrend, and this is what we would call a trend. There's not a lot of there's very little volatility in it. We have some attempts to rally by cable, obviously bouncing off significant support levels, buyers stepping in, believing that maybe there is going to be a reversal, or even traders deciding that possibly there's enough range in that bounce to be able to take a trade to the upside before it's sort of fairly relentless move lower. Then we have a period of consolidation. This could have been in overnight, as it were, and then again another attempt to rally. And what we're seeing at the moment with cable is that it is trying again to rally, and it is trying to bounce off significant levels. We know the levels that we have here. These levels are put on our chart. This is our own proprietary indicator, a support and resistance indicator. And what we've done here is, where you have a solid line, it's a fairly strong level. It's much stronger than the hatch line. It's held in the past. It's maybe in the past it's where the price has bounced off. So with support and resistance levels, not only do they sort of give some structure, a framework to the price action, they can then also help you decide whether is the price likely to, is it going to struggle when it reaches that level, or is it going to move higher? This is just purely based on price. And as I said, on a Renko chart, not only do you see this the C state of the price action, you see the strong move lower. Now it's really quite choppy, clearly trying to base buyers stepping in for whatever reason. And the other thing about especially the Forex market is levels with a 0 and a 5 are hugely significant. It's a bit like gold, really. As I said, I write about gold. When gold reaches some psychological levels, they're not in the sense that 1200, for example, is what I call a psychological level. It's almost as if it doesn't matter from a technical perspective whether it's a good level to buy at. It's so ingrained in traders and investors. Oh, it's down. They make a decision that when the price gets to 1200, they think it's fair value. Oh, I'm going to buy. If you look at a chart for gold, which we will as well, 1200 has been in the past. It's been a level where buyers have bought, and it brings an element of psychology into these levels. Now, how you determine significant levels, we have our own indicators. We have our support and resistance. We also have an indicator called Camarilla. Again, it's based on price. All these levels have a significance. We know when price gets to a certain level what it is likely, what it may do. And then, but what we also have here is we have something extra to these levels, because it's all very well seeing a level. Fibonacci is a classic one. When price approaches, I think it's the 61.8 or the 50%, a lot of traders are drawn to that level almost blindly. Right, it's a 50%, it's either a buy or a sell. but there's never any way of determining whether that level is valid or not. Now, it will be valid in the sense that it's like a self-fulfilling prophecy. So if enough traders believe that price should rally, as with gold, on the 1200, there's enough belief, if you like, at, about that level that they will all pile in. But if the overall trend, if the overall sentiment is actually still overwhelmingly bearish, because you know the forces that really drive this market, you know, they don't care about $1,200 per ounce level. They think no, they're going to drive it lower. Then they're going to, those traders are going to be taken out of the market, and taken out of the market quite savagely. Now, that happens all the time. So what can you do? How can you validate that level? And the way we validate that level is with volume price analysis, because it's volume. Volume will confirm whether what you're seeing on the chart at a particular level is actually genuine or not. And I suppose that's really, David, the whole premise of volume price analysis, because not only does it give you a price structure, and it helps you explain the price cycle, what it does, it gives you that additional, shall I use the word, edge, and that is this move that I am seeing on my chart, is it genuine or not? And the only thing that will validate that for you is volume, because yes, you will see traders step in at these psychological levels, but boy oh boy, you know, it's really to see whether is there enough participation by the forces, the market makers, the manipulators. They really, are we really seeing a reversal, or are we just seeing a temporary bounce, which I have to say, you know, in some pairs and in some markets, such as, you know, if you look at pound yen, because it moves, it can move on a daily basis in a short period of time, it's got a very wide range. It is possible to take, if you like, trade that bounce, but you're not going to be in it very long. You know that, you know, it's you get in and you get out as quickly as possible. David, is there anything else you want to say to that? No.
I've actually answered that question on the Renko, but Anna can probably show you easier on the screen. Hold on a minute. We were just going to switch screens. Bear with us a moment.
The Renko chart that we've developed for MT5 is actually unique, and essentially this is the Renko for cable, and this I've actually set to 2 pips. So every time 2 pips goes through the market, one of these little bricks is posted. A Renko means brick. Now, what you can also do with the Renko that we've developed for MT5 is that you can apply indicators to it. Not only can you apply our own quantum indicators to it, but you can also apply any indicator. I could put a moving average on here. I could put, well, you know, whatever it is I want to put. But it's very clever on how it works. So if I just move to, let's have a look at Aussie Yen Renko. Here we are. Now, what happens usually is sometimes when you turn on again or you switch from profile to profile, the Renko, it takes a long time to update. So all you do is you take that off, and because you apply it onto a chart, on the minute chart, so that's what it looks like when you apply the indicator. You apply it onto the 1 minute chart, and you can see here what I've set this to is to 2 pip fixed size, because there's also an ATR version. And now I want to actually open my Renko chart, so I just click that and it comes on immediately. And I've also got a template with my indicators. There we are, and I've instantly got a Renko chart already pre-set up to what I want it to look like. And in fact, the Aussie yen, let's have a look, and if you, there we are, and you can see here, and this is what I mean by, you know, these these moves that you get in the price cycle, whether they're tradable or not. I mean, this is clearly a lot of volatility, as we can see here, and we've got the, as I said, I use the our own proprietary support and resistance indicator. But you can use trend lines, you can use, as I said, Fibonacci, you know, whatever it is, however you want to mark up your chart, to, you know, to give it some kind of, to give the price action some kind of framework is very, very much up to you. Now, once you've done all that, we still have to try and determine, you know, is the move that we are seeing on the chart, is it valid, is it authentic, and is it genuine? And this is really where volume price analysis, the volume element of volume price analysis comes in. Is that okay, David?
Yeah, just stay there a minute, sorry.
Yep, on Aussie Yen.
Yeah, because I'm probably confused. Hold on a minute. Right. You switch off for a minute.
Sure. Did I say something wrong?
No, not at all. Sorry, just to clarify, which I may have confused. Sorry, the answer I gave on the Renko applies to MT4. And the reason it's slightly different between MT4 and MT5 is this, that MT4 has offline charts. And that's the way that Renko works on MT4. So if you're using it on the MT4 platform, what you will find is when you apply the indicator to a time chart, it will then deliver you the optimal or the selected offline chart time frame. So when you put the indicator on MT4, it will then say you need to open the 1 minute or the 2 minute offline chart, and it'll tell you that as part of the indicator. In terms of MT5, it's slightly different, and we had it took us a long time to develop purely because MT5 does not have any offline charts. It doesn't offer that as an option. So we had to create the Renko from scratch, and it works exactly the same way. It's got the ATR function, and what the ATR function does is to deliver the optimal settings. So as you saw there, Anna selected a fixed box size, which is the traditional way to use a Renko, always has been. But what we've developed with this on the MT4, MT5, and also over on NinjaTrader now is an ATR function, in other words, average true range, which is looking at the price action and then delivering the optimal setting for that instrument at that particular time in the session. So in other words, rather than you telling the chart what box size you want to trade because you really haven't got a great idea about what it should be, what the indicator does is actually deliver it calculates that for you based on the price action and delivering that automatically. I hope that explains. Sorry, I don't want to confuse anyone because I know we've got a lot of people still on MT4. That's how it works on MT4. And that's purely because on MT4, you've got offline charts on the MT5 platform. It's not offered. So we had to create this from scratch and deliver the chart in a different way. And as far as we know, we're the only company that has a Renko for MT5, which also has the ability, obviously has the ATR function, but also has the ability to add the indicators to it as well. I'll just pass back to Anna. Hopefully I haven't confused everybody.
And just to round off a little bit, a couple of things on the support and resistance. Of course, with support and resistance, and in the sense, whatever you use for support and resistance, whether it is Fibonacci, whether it is a proprietary indicator, a moving average, it really doesn't matter. You then by having the this framework, it will then help you also with your stop loss and also where a price objective. Where do you think the price is going once you have, you've created the framework that you feel the most comfortable with? So that's what I wanted to say on that. And yeah, can I just say one more thing and that's it? And then what I was going to say, and I should have said it right at the beginning, we've changed the timings of this session. We're actually going to stop. Normally we go through the London session, but the reason we're going to stop a little bit earlier is because even if you're on a faster time frame, even a 5-minute chart, a 15-minute chart. Price action takes a long time to develop, and we know a lot of people, they like to come along, but they can't stay with us for the whole of the session. So what David and I have decided is we're going to do what we're doing at the moment. Now we're going to have a look at some price action that maybe has been highlighted by the currency strength indicator, see what is likely to happen, have a look at the kind of analysis that what we see on the chart. And what has happened in the past is we just leave it there, and you sort of say, well, you know, what happened next, as it were. So what we're going to do is whatever we look at in terms of charts, we are going, once we stop, maybe later on this morning, we're going to revisit them and do a very short follow-up video or videos, maybe 2 to 3 minutes, and say, actually guys, you know, this is what we were looking at this morning, this is what happened as a consequence, and just sort of, you know, just finish it off, because webinars are lovely and you pick up bits and pieces and we answer questions, but really, you know, we say this is going to happen, this is not going to happen. It's just nice to, it just brings it to a nice close, doesn't it, David? What do you think? Is that okay? Right, anything else you want to say, or can I move over to you? Right, we're going to move over to David because he's got a NinjaTrader. I will come back to cable because there's a couple of things I want to show you, particularly with regard to, as I said, the price cycle, and also how we can use faster time frames to help us decide whether in fact we are looking at a potential tradable reversal, or it's just it's just a bounce higher to suck in some more traders. And with cable, the other thing to bear in mind as well is price action is fine, you know, and it's great technical analysis, but you do have to be aware of the fundamental news. And the fundamental news for cable or sterling is tomorrow we've got GDP. So if you are trading cable, just be aware of that.
You should be seeing my screen coming up any minute, hopefully. Yeah, I'm just looking over to Anna. That's fine. That's great. This is on the NinjaTrader platform. Just as an aside, at this time of day, where we are obviously in the European session, London's not yet open, and a lot of the pairs where you see these strong cross flows, and I've got the Euro Aussie here for the daily because it's just a great example of several different aspects, particularly of support and resistance, particularly of distribution, and the sort of price action you expect to see there, and also of the breakaway that is now occurring. So I just want to highlight some of those for you, because this is just a really nice example. It's an exciting chart for me at any rate to look at. This is a daily time frame, but this could be anything from a minute to a month. It doesn't matter. And I guess that's one of the beauties of not only volume price analysis, but also understanding chart structure and understanding the phases of chart structure, the typical cycle of accumulation and distribution, and the buying climax and the selling climax, and also whether we're in a primary trend or a secondary trend. In other words, secondary trend is a reversal within a primary trend. So you've got all those facets here. But as an aside, when you're trading at this sort of time of day, between coming out of the Far East Asia session, where the focus has very much been on the yen, the commodity currencies, particularly Aussie, New Zealand, and you're starting to come into Europe and also London, of course, the Euro Aussie, Euro New Zealand, they're great pairs to have a look at, because you do get these strong cross flows from moving from one session to another. So I would urge you to have a look at these sorts of currencies, particularly the commodity currencies. Canadian less so, but certainly the Aussie and New Zealand, particularly against the European currencies of the pound and the euro. I'm just focusing on the euro here because this chart is so good. What I really want to highlight is, first of all, this phase of price action here, this congestion phase. A lot of traders get bored in congestion phases. We don't, because we're constantly hunting them out all the time, because congestion phases are married to distribution and accumulation phases. Of course, you get secondary congestion throughout on an intraday basis, but also longer term. And when it's long, and when you're looking at these charts, you're constantly looking for, if you're a breakaway trader, for example, if that is your tactical approach to trading, and let's face it, if you're looking for primarily, all you're looking for really as a trader, you're either looking for reversal, you're looking for a breakout, or you're looking for development of a trend or jumping on an existing trend. There isn't really much more. The congestion phase is really the start of all that, because from congestion comes a breakaway, and often, as it seems to be here, we get a reversal, and from a reversal and from a breakaway, we then develop into a trend. So those facets of tactical approaches to trading are really all one and the same, if you will. They just happen at different times and at different speeds. This is just a really nice example of the congestion and also the support and resistance levels. This is on NinjaTrader, but these levels here, this red dash line and this blue dash line, they are accumulation and distribution, but they are based on price. So it's very much the same as the support and resistance indicator on MT4/5. And the reason they're colored is because, and the depth of the width of the line is larger on some and narrow on others, is simply what it reflects is how many times that area has been tested. And the red ones are telling us that it's been tested a lot of times from below. In other words, it's building strong resistance. And this blue one, where it's been tested several times from above, in other words, a platform of support. And it tells you along here how many times that's happened. It's 7, and I think this one is 9. Now, the price action in here is typically what you expect to see. That may not be instantly obvious, but what you expect to see in these phases is very much this spiky price action where a market has tried. Certainly, we've come out of the uptrend, we're moving into congestion, the market tries to rally, it falls back. We've got a lot of wicks to the upside here. What you've also got to remember is when we get two candles like this is a 2-bar reversal. It's very easy to overlay one candle on another and see it instantly for what it is. So a 2-candle reversal here will look pretty much like this, for example, with a deep wick to the upper body. So the market's risen very strongly and then fallen back again. It'll have a little body, but a big wick to the upper side. So a 2-bar reversal is nothing more than a reversal, an upthrust, shooting star, call it what you will, over 2 days. So we've got one here, and we've got another one here. So they are shooting stars over 2 days, or upthrusts over 2 days. Then we have more of these. We have more effort to rally. Then we have another attempt to rally, this time under huge volume. And this, at this point, is looking ever weaker. This is the sort of price action you want to see. You've got another one here, you've got another one here, you've got another one here, constantly trying to rally, fall back, rallying, falling back, rallying, falling back on the day, again on the day. And then finally, you get the breakaway. Obviously, we've got this very strong platform of support below and a very strong ceiling of resistance overhead. Now, at what point you decide to get into this is always the issue, but clearly what you're looking at here, you would be looking at this from a daily perspective. And this is where you bring in all the other aspects of multiple time frames, because you would then be stepping down the time frames, perhaps to find an entry point. For example, this was a heavy down day, clearly virtually no wicks to upper or lower body, so pretty much bearish throughout the day. Within that daily candle, I can assure you probably on the 5, the 10, the 15, you would have seen pauses, you would have seen what was a primary bearish trend on the day move into reversals on an intraday basis. In other words, your primary trend is bearish, but your secondary trend would have been a reversal. Now, at those points, you may well have seen good opportunities to get into that bearish picture that was developing on the daily time frame. Over the last couple of days, we've seen a bit of congestion building. Now we're starting to develop further. We had weakness yesterday, so attempt to rally, falling back. Looks as though we've got a similar picture here. This is minor resistance that's built in this level, but nevertheless there. And we've also got a minor support platform potentially below once we go through here. And you're constantly looking over to the left of the chart as well to see what else you've got in terms of price action over here, in terms of where we're going longer term. And we would have had exactly the same sort of price action here, up here into the congestion phase, breaking through this level here, breaking through this level here, and down we go into a nice trend that's developing. We've got rising volume here, which is giving us a strong hint that you know, the bearish selling at that point was continuing. The other aspect to the chart is obviously to look at the indicators. Obviously, we're looking at volume. We're looking at the weakness there. We saw that very strong candle here with a ton of volume. And one of the aspects of volume price analysis, which we fell foul of this many times when we first started, is you see a signal like that and you get very excited. You think, the market's going to collapse tomorrow. It's going to roll over. Great, you know, let's get in. It's often not the case. You have to be patient. The fact of the matter is this was looking very weak, this chart, the whole time. And it's not a question of if it's going to break, it's just a question of when. And it is very much patience. And what that then dictates for you is that if you want to get into a trend, the development of a trend early, in other words, you want to trade a reversal. So you're seeing this price action develop through here, and you're thinking, well, you know, I want to short this this market now, but I'm prepared to get in early, even if the market doesn't roll tomorrow or the next few days. Then I want to get into this market early because you want to maximize whatever that market can deliver for you. That entry comes at a cost, and the cost is where you set your stop loss, because if you were going to do that, you'd have to set it pretty wide. You've got to allow for the fact that this market may not just roll over for you the following day. It's going to maybe whipsaw some more. You're not exactly sure when it's going to break. You're pretty sure it is going to break, but you're not sure when. Because you don't know the answer to the when question, you have to set your stop loss that much wider. So you'd be setting it up here, maybe 100 pips, 150 pips on a daily chart, for example. But now you're taking advantage because you've put more money at risk on the table in your stop loss position, and now you're being rewarded for it. In other words, you're getting into the breakaway and the development of that trend early. So you are in up here somewhere or up here somewhere. It doesn't really matter where you got in, but you got in early and you're now making money from the development of the trend. If you're a breakaway trader, you may be looking at this and thinking, great, I've now got this very strong platform of support in place. I can now jump into this market. Maybe you saw this candle yesterday, you thought, yeah, this is confirming, you know, got decent volume under here. Bear in mind, we're in the middle of August here, so the volumes will automatically drop away through seasonal aspects. But you might see this is a classic candle for getting into a short position where you've got this rally, weakness, decent volume, market looks as though it's continuing to remain weak. If you're a trend trader now, you might well be waiting for that trend to develop into something like this, hopefully. If it continues on the way down, where are we going? Probably all the way back down here with a bit of luck. And finally, you look down at the bottom, you look at the trend monitor here. As you can see, this solid line here. We had the development into the bearish trend. It's almost classical, the trend monitor here. Then we had the transition into the darker red, through to darker blue, into bright blue as the bullish trend develops. Then we're back into a darker color again. We've gone darker blue, a little bit of bright blue there. Looked as though the market might be rallying. It wasn't. Then we're back into dark blue, through into dark red, and now we're into bright red again, into the bearish trend as it's developing lower. That's the Euro Aussie. It's a really nice example of many different aspects of volume price analysis, of really what you're looking at as a trader from the tactical approach of what you're trying to do every day. And you know, I make the point again, this could be a 1 minute chart or a 1 monthly chart. Absolutely no difference whatsoever. The principles of price action, the principle of volume price analysis, the way the indicators work and everything else is identical. Just to hop over very quickly onto the CSI, what we've been seeing, what you were seeing on the Aussie yen, on the MT5, was very much this weakness in the yen. This is the yen, the magenta line here. And we've been seeing Aussie strength rising, and even more so on the Canadian dollar up here. So the reason that you're seeing that strength and weakness develop in those particular pairs, particularly in the commodity currencies, not the New Zealand dollar down here, which has absolutely got hammered overnight. You can see it, the grey line here, and the reason it got hammered is because of the RBNZ coming out with some fairly dovish comment on interest rates in the future for the New Zealand economy. That's why the New Zealand dollar is being hammered and has broken away from traditionally where it sits with the other two commodity currencies of the Aussie and the CAD, Canadian dollar. And that's why you've been seeing that strong trend. This is on 15 minutes at the moment, but this will apply whatever time frame you're looking at. And if we just hop over onto the currency array, you can see that pretty much reflected. This is on 5 minutes. This is pretty fast. You can see here the New Zealand yen down here is pretty much the laggard. It's it's trying to rally, but it's not really following the others. And the Canadian yen is the strongest, and we've got the Aussie yen down here as well. And what's interesting on the currency heat map, which I've also isolated out here, I've got the euro isolated out. This is the euro Aussie, this is the euro CAD, and we've got the euro New Zealand right up at the top here. And the one we were looking at was the euro Aussie there over here on the daily. So if we're looking at the heat map, it's sort of mid-range at the moment, but you can see this bearish sentiment starting to develop through the faster time frames. This is 1 minute, 5 minute, 10, right the way through to the daily. We've still got bullish sentiment on the weekly and the monthly, but this red bar, if you like, of sentiment, sorry, this red bar of sentiment for the euro Aussie is starting to develop into these slower time frames, and that's why we're starting to see that breakdown. Now, if that continues, obviously what will happen to this, it will fall all the way down to the bottom of the chart. No guarantee it will, but that's what we're looking at, and that's you can see down here, obviously the New Zealand getting absolutely slaughtered here at the bottom. It's bearish throughout, right the way over through to the very slow time frames on the New Zealand dollar and the New Zealand yen. We've got the New Zealand Swiss here as well, New Zealand CAD up here as well. So the New Zealand is getting an absolute pasting right now. I'm going to pass back to Anna.
Sorry,
just
can you just answer a question
yeah.
about the trend? I think it's a trend monitor.
Yeah. Let's have a quick look. Sorry, just a question about, is a trend band running behind in the June area or your chart? Is the trend band, sorry, Zena, just flick back to behind in the June area.
I think she means here, but from the reversal, it doesn't change.
Right, okay. But the way the trend monitor works is we have two indicators, the trends indicator and the trend monitor indicator. And the two run at different speeds. The trend dots, which you saw on Anna's Renko, they will always change first because they're very close to the price action. What the trend monitor does is it tries to help you to stay in a trend and sit through those phases of price action where the trend reverses but then picks up the primary trend again. In other words, where you're in a primary trend, then you see a reversal or a pullback, which happens in all time frames, but then the market reverts back to the primary trend again. What the trend monitor is trying to do is to help you to stay in through those. So where price action pauses, maybe for example up here, we move into the bearish trend here, and it'd be very easy to look at this and think, oh well, maybe this is a reversal, maybe we're going to go back up here again. And that's really what the trend monitor is designed to do. So what you will find is that these transitional colors will kick in once the trend starts to develop more fully. In other words, you've got a true reversal and not simply a pullback. And of course, using the trend monitor, you would have it applied to all the different time frames. And what you see is clearly, let's say you've got 3 time frames, and let's take a 1 minute, 5 minute, 15 minute example. If it's a true change in trend, you'll see it first on the 1 minute, and if that is indeed a true change, then it will ultimately ripple through to the 5 and the 15. And that's the way to use the trend monitor, not in isolation as I've been showing you here, but very much in concert with multiple time frames, because you will see the signals coming through on the faster time frames, and then if that is a change on your time horizon of 5 or 15, then it will show you. What it will also show you on the faster time frames is whether that's just merely a pullback, if the trend monitor then reverts back to the primary trend color again of either red or bright blue. Hope that answers that one for you. I'm just going to pass back to Anna. I'll move my screen back to you.
Can you show me what you mean by multiple timelines?
Okay.
Hi. Multiple time frames, it simply means that when you have your charts up, you're not looking at just one time frame. You know, you could be looking to take your trade on a 10-minute chart or a 15-minute chart, but next to it you would have a faster time frame, and on the other side you would have a slower time frame, because you have to see the price action on the chart that you're looking to take a trade on in context of what is happening on the faster one and on the slower one. You know, if you try and take everything on, and I know there are people out there who say you only need to trade one time frame, that's really, I personally, I don't understand it, because as I said, all price is, you have to, everything is in context. So in fact, I'll explain this, because this is actually cable, and I said earlier on, cable has been trying, after this, it's been in, you know, free fall, if you like, for the last few days, for all sorts of reasons. So a lot of traders want to either join that that move low, or are they going to try and take a trade, a reversal trade, a bounce, if you like? Is there enough in the move higher to be able to take a trade? It may not be a reversal, but there could be enough range in the move to say, yeah, I'm going to take that trade. Now this is a 3-minute chart, so let's just take that down a minute. This is a 3-minute chart. I've got the daily chart up here, and I've got the hourly chart up here. You can use the 30-minute, you can use the 20-minute, whatever it is. So this is a 3-minute chart, say, on which I'm going to take my trade. But I need to see how that sits in context of the daily. I actually usually have the 8-hour chart, because the 8-hour chart is the 3 sessions that Forex moves through. That's the Asian, Europe and London, and then New York, Europe and London. And it gives me a sense of what is the structure of this chart. Am I trying to, on my 3-minute chart, am I actually in a congestion phase on a slower time frame, which is fine, because, you know, as long as I know, but I also know that if it is in congestion on a slower time frame, then I possibly not going, it's going to be a lot of choppy price action on the faster time frames. I'm not going to be in that trade for very long. Now with cable, in fact, I was going to highlight cable anyway. Let's move to the daily, and I'm going to have to scrunch this up because it's very difficult to see. So right, here we are. Where are we? This is the daily. I think that's the daily chart. I'll just scrunch it up some more. No, that's too much. What we're looking at the moment with cable has been hit by all sorts of things, Brexit, you know, etc. We know the backstory for cable, so I don't need to go over it again. If we go right over here back to 2017, now, could you say, well, is that a trend higher? Well, it certainly came off these lows. It's been coming off the lows since Brexit. It's been moving higher, then moving lower, then moving higher, then moving lower. So it is a trend, but it's nothing like a trend that we saw in our schematic, and nothing like the trend that you would see in a pair or in a market that's not being affected by politics, if you like, by the sort of political uncertainty that we have here in the UK. But generally speaking, overall, you can see here that despite Brexit, despite everything else, cable has had a pretty good run higher. And in fact, it topped out here at, it even got up to 143.75. Now that obviously coincided with a massive fall in the US dollar, but we did get what we would call a top. In fact, we got almost, I would say, a double top here. We've got a top here at 143.75, and then it got here 143.75. Then it went into what I would call a much smoother downtrend. You can see the smoothness. It's a sharp fall. It's a trend with very little volatility, but a lot of momentum, and I can expand that out now. There we are. That's much better. So now in this period here, while cable was going up and down, it's quite a wide range. Would there have been an opportunity to take a trade, say in this candle? Let's find this candle. Find that candle if it's going to hold. Say this candle here. It won't hold. Let me just put it down. Say this, just randomly pick up this candle here on this, whatever day that happened to be. Oh, here we are. That was the 2nd of May, 2018. Would there have been an opportunity to take a trade to the downside and even to the upside on the faster time frames on the Renko? Yep, for sure. This action wouldn't have happened. Forget what we're seeing here. What we would have seen here on the daily chart, it had a nice move higher, topped out here at 143.75. As you can see here, weakness coming in, wicks to the top, a weakness here, then attempts to rally, didn't quite get back up to 143, but you can see two very strong down days. Now within those candles, down in the faster time frames, you said, well, would it automatically have been, you know, a trade to the downside? Possibly, but even within that candle, there would have been opportunities to the upside, and we can see this in this candle. This is a doji candle. A doji candle means there's indecision, but a doji candle also tells you that there has been good two-way price action. You have to be fairly quick, you have to get in and out, but it is possible to trade. Now, this huge, if you like, this double top here, finally it's broken through. And it's broken through to the downside, but see the move lower. It's not been nice and smooth. There have been attempts to rally, move lower, attempts to rally, move lower. Now, this is the piece of price action we're looking at the moment that everyone is getting terribly excited about, because it's, you know, it looks as though it's, you know, it does cable. I wouldn't say it looks terminal, but it doesn't look very healthy at the moment. But look at the volume. The volume is not. You know, it's nothing like the volume bars that we've had in the past. Now, we do have to bear in mind that we are in the summer. We're in the depths of summer. Liquidity is much lower. Price action is much more spiky. And you also have, there are fewer participants. So you have to read it in that context. But is the volume telling us, is this perhaps this move to the downside, is it now becoming overdone? So you as a trader, you then have to decide, maybe you've missed this move, maybe it completely passed you by. I can assure you it's passed lots of people's by, because they think, no, I think it's a bit overdone. What do I need to see? Am I going to see a reversal? Now, we have all sorts of indicators to help us, give us the heads up on reversal, but if you're going to be looking at, you know, you don't have the indicators, how are you going to do it with just your charts? Then you're going to have to, the volume will confirm, even on the faster time frames, whether any buying that comes in is actually genuine. And what's interesting with this fall away of volume on cable, partly seasonal, but partly because we have GDP tomorrow. Now, maybe that will either be the trigger for a reversal, or is it going to be a trigger that is actually going to be given another thump lower. And if you are going to want to join this move lower, you're going to have to look at it on something, a faster time frame, and just see, you know, is the volume there to justify that this is actually a genuine reversal. And the reason I had the 3-minute chart up is because if we look over here, let me just put my pointer up, and we're going to have to stop fairly soon. We're going to stop here, the spotlight here. Now, this was a really nice move lower. Now, this is obviously a continuation of the bearish trend we see. We have here, we have rising prices, and we have falling prices and falling volume. But each candle is a volatility candle. We know it's a volatility candle because we've got the volatility indicator triggered, but we have a lot of volume coming in, and we have a ton of volume coming in with buyers. Now, maybe it reached a level down here at 128 something. As I said, these psychological levels, people think it's fair value. Right, I'm going to step in. Maybe the market makers moved in because they want to buy sterling. We don't know. But all we can say is that after this little run lower, if you were short you see this combination of candles and you see this wick to the bottom of this candle with this hammer candle and with volatility, that is going to tell you, if you're on the short, on the faster time frames, you think possibly there is a significant reversal bounce higher. So you're short, you come out. Now, the bounce higher actually did occur, and if we look at the number of pips that delivered, and we see that this bounce higher, what happens with volatility is the price tends to reverse inside the spread of the candle. It didn't do it here. It didn't do it there. I think that was a very strong, there's a lot of momentum behind those moves. So it's like trying to catch, you've heard the expression, try and catch a falling knife. And I think that's what you had there. So you have this reversal in there. You saw what we also know, we know why the sting has been taken out of the fall lower. Look at the volume. We had a ton of volume, which is buying volume coming in there. It has to be buying volume because you wouldn't have the wick to the bottom of that candle. And then the volume falls away on the next two candles. Even though that candle has got a wick to the top there, look at the volume. You need volume for price to go up, and you need volume price to come down. Now, the CSI, the currency strength indicator, I can guarantee it would have been at an overextended. So we say, yeah, that is potential for a reversal higher. Given the bearish sentiment towards cable, it's probably not going to be very, if it's going to move higher, it's probably not going to go very far. But is it going to go far enough for me to be able to take a trade? And that really depends down to you, is how much you are prepared to to put your analysis on the line. Some traders aren't. They don't feel confident with that. They don't feel confident enough to be able to jump in when everyone is is going in the opposite direction. But if you had been and you say, no, I think there is, there's going to be enough in it for me to take this, you can see this. I think there was about 20, 25 pips in that move, David, something like that, in that trade higher. And then what we have here, we have a sort of two-bar reversal. That is a shooting star. We've got an up candle. We can see the volume. If you overlay those two candles, you overlay that volume, you have a shooting star with a lot of volume. And then we've had the drift lower and so on. And really, we've been in congestion while we're waiting for the London Open. And we've had here with the London Open, we've had a build up in volume with Europe and London. We've had more volatility, and we'll see whether in fact there is, cable is now going to bounce higher as it did here. But this combination of candles, combination of volume, really does explain what we've been trying to say about the price cycle, about sentiment, and about sentiment in different time frames. And if you want to take a trade on a faster time frame, what you have to be aware of. Right, I'm going to stop there, Dave. With the follow-up video is we will actually look at cable. Now, when you have a situation with a pair such as cable, this is where using a non-time based chart will actually help you with your entry points and also your stop positions. And this is what we're going to do next week, is we're going to look at how non-time based charts such as Renko, such as Tick over on NinjaTrader can help you with these decisions. And just to give you an indication of what we mean by the congestion phases, and we can see here this is what happens, and the trend monitor will just dip in and out of the different colors. This is choppy price action. We know the levels that this cable has to go through, either to the downside or the upside, and this is where your trading tactics come in. You have to decide, do you wait until those levels are broken? Do you put limit orders in? Do you put do you go with the market? Those are all decisions that you have to make, and you can only make those decisions once you have practiced the different trading tactics and applied them to the chart. But you can't apply a trading tactic to a chart unless you know what the price cycle looks like, where you are in the price cycle, what is the structure of the chart, what is volume price analysis telling you. There's a lot of things you have to pull together before you know whether a tactic is going to work or not. So I think the follow-up video is going to be on cable, David. Is that all right? We'll do it later. Okay, we're going to stop there just as London comes on board, and we are back later, but just very, very quickly, I just want to run through the indicators that we use. The proprietary indicators are from quantumtrading.com. You can just buy one, you can buy a bundle, or you can buy the complete package. If you buy one and you want to upgrade to a bundle or a package, you obviously get a credit for that, and you only pay us once, so it's a lifetime ownership and you never pay us any more. You also get, with the indicators, all future upgrades for free. We're always enhancing the indicators, we're always enhancing the platforms, and you can transfer your license from platform to platform. There is a slight price difference between the MetaQuotes indicators and Ninja on the complete package, because we have a slightly different indicators for NinjaTrader. And quantum trading, those of you who know us, I know we've got some users in the room, you will know that the guys there, they work 24/7, 365 days of the year, you know, so if you email us on a Sunday, you will get a response on a Sunday and holidays. If you invest in the full package, you will also get all future indicators we develop for free. So once you've paid whatever it is the price is at the time, if we develop 2, 3, 4 more indicators, which we're always developing, we're always upgrading, they're simply added to your package. You do not have to pay us anymore. And we do have a program, a Forex trading program. We are looking to add other programs for other markets, but essentially if you've win the program, it includes the indicators and it includes the videos, the podcasts, the downloads, and the schematic I showed earlier is just an example from the technical analysis module, and it's actually part of one of the videos. And it is a very comprehensive education program: technical analysis, fundamental, relational, psychology, and the mechanics of trading. It's really everything you need to know to be able to succeed as a Forex trader. And if you've already bought the package, then obviously you get a credit and you just paid the difference between the education program and the indicators. And if you have any questions about anything that we have covered in today's session, you're more than welcome to drop me an email. That's anna@annacooling.com or helpdesk@quantumtrading.com. And we are back later. We will see what happens with cable, because it is a very interesting chart for all sorts of reasons. And if you're not joining us later on, we will catch you next time. So take care, everyone, and have a great day's trading.